gold, right? An ounce of gold is always an ounce of gold. It doesn't change, it doesn't grow, it doesn't get more efficient. And so for 5,000 years, that single ounce, if you gave it to somebody, they would give you essentially a fine person's suit, literally from Cleopatra's time to a suit of armor to Savile Row today. And so things that hold value, Bitcoin being digital gold, right? It has all the qualities of gold, but it's better in that it's more divisible and more portable. And so I think for the next 5,000 years, it becomes the digital version of that as we move into the digital age. And so when I look at that market and all markets related to commodity-like assets, in an expanding monetary supply scenario where you got China printing and the US talking about printing, Europe printing like crazy, those assets are going to rise. And gold's had a great year. In fact, most people have no idea. Gold has outperformed stocks for the last 25 years, compounded. Like, no, it's not true. Well, it's because, again, the gold didn't change. What changed is the number of dollars you need to buy the ounce of gold. So here's a fun fact. Less fun if you are actually a stock investor. Equities, people say, oh, they're all-time highs. This idea of fiat currency that we stole from the UK, which stole from the Dutch. Dutch were the first to introduce it in 1607. So you ask me, what do I think about the markets? Well, what I think about markets is in an environment where currencies are being devalued because countries are too far in debt, and you've seen all the nonsense going on with Elon tweeting about, the silly budget, the big, beautiful bill. I mean, here's a guy who ran, not Elon, but Trump. Here's a guy who ran, drain the swamp, get rid of all the graft and corruption. And then he passes the big, beautiful, or he promotes the big, beautiful bill with a $2.5 trillion deficit. Are you fucking kidding? Sorry. Are you kidding me? I mean, he's the biggest. You're like, I'll say what you want to hear, but I'm going to do all the bad stuff as long as I get paid. So what's going on fiscally around the world is so irresponsible that you can't help but want to protect yourself by owning in terms of devaluation. Look at Japanese government bonds have lost half their value in the last 5 years. Shocking. But there was no choice, right? They took interest rates to zero. And as soon as they left zero, which, Ueda-san came in and replaced Kuroda-san, the head of the central bank, Bank of Japan. And he's like, well, I'm an academic and I think we need to get rid of yield curve control. Like, okay, but if you do that, all your insurance companies are bankrupt. Most of your banks are going to be bankrupt. And you, the Bank of Japan, is going to have a problem because you own 74% of all the bonds. Look, I don't care. Theoretically, this will all work out. Like, well, practically, it's not gonna. So there's those types of issues all around the world. And one thing I'm very sure of, my wife says I'm frequently wrong, never in doubt. Like, well, occasionally wrong. I am never in doubt. I mean, I am prone to hyperbole, and so people say, how can you say things like that? Like, what do you mean? He says, well, you say things so forcefully. Well, what's wrong with that? Well, people will believe you. Well, that's the whole idea. He says, well, what if you're wrong? Then I change my mind. I mean, they go down and commit a stupid foul because they're thinking about the last play. What a great player does, they don't even remember taking the shot. They go back, play good defense, steal the ball, make a layup. Michael Jordan said it, like, I missed 19,740 something shots. I don't remember taking any of them because he wanted to take the next shot because he was sure he was going to make it. Now, sometimes you don't. And so you'll want to have that ability to try new things, to keep pushing forward. But when you make a mistake, admit it. And this is a big thing on investing, is everyone thinks, well, you should double down, right? When something goes against you, I'm just going to buy more. Well, yes and no. I mean, if you've done the work and you know the value of the asset and it gets cheaper, okay, you could argue that does make sense. However, the market's saying something that you missed, because the market's never wrong. So, well, I'm right, the market's wrong. You're just wrong. So there's a famous picture of Paul Tudor Jones, famous hedge fund guy, in his dorm room at UVA. And it says, losers average losers. And it's so true. And that's particularly true in trade. I still consider myself young. I don't look young when I see myself, but I feel young. And the key is the get rich stuff, you want to press your winners. And you want to have that ability to really go along with things that are working in your favor. Now, eventually you do want to take some profits and redeploy into other ideas. And at some point, when things get so out of whack, like CoreWeave today or NVIDIA even today, it's not that they can't go higher. It's just that mathematically, if I could find a smaller cap version, and I think, maybe this is a great segue, anticipating a question you told me you were going to ask, is so many people are invested in Bitcoin, right? And either they have Coinbase account, and it's not really Bitcoin. Sure it is. My dad has a Coinbase account. He loves it. He's never going to have a ledger. He's never going to hold his own keys. I'm not going to hold his own keys.
He shouldn't though, right?
He shouldn't.
He doesn't.
He's 87 years old. He should not.
Yeah.
No. Now, if you want to hold your own keys, have your own, that is the future. Yes, that's beautiful. Now we have to fix some of the UI UX problems, but in a prudent way. Like people lever Bitcoin 30, 40, 50, at one point in the last cycle, 80 times. You're an idiot, right? I shouldn't out a family member. I won't out him, but I have a family member. He called me up and said, they stole my Bitcoin. Like, what are you talking about? So, well, it was a Bitfinex. I'm like, stop. You're a freaking idiot. You put 80 times leverage on an 80 vol asset and you got a margin call and you didn't pay it and they took your Bitcoin. Now, the fact that company, maybe that was their strategy to lure people in knowing that they wouldn't make the margin call, maybe that is theft, but the bottom line is you're an idiot. If you did 80 times leverage on an 80 vol asset, you deserve to lose it. 20 times is too much, but one turn of leverage, maybe even 2 turns of leverage in a corporate structure where someone else is doing it, yeah, that's good. So on top of Bitcoin, I could own Strategy, but then there's these Me Too's, and I'm actually involved in one of them, Metaplanet.
Before we jump into the Me Too's, Mark, let me just ask you a basic setup here, which is, in your view, should investors have additional exposure to Bitcoin beyond whether it be spot or whether it be ETF or whether it be an centralized exchange?
I mean, sure. Look, here's the thing.
And how
so bonds are stupid. You should be all in equity. And I would argue even equity is dicey because you should be in private equity and venture capital and commodities. But those are illegal to put in the 401k. Why is that? Well, because BlackRock and Vanguard wrote the law because they happen to sell these things that you can buy, ETFs and mutual funds. So at the end of the day, if you can do a self-directed and put something like Bitcoin or real estate or private equity or what Peter Thiel did, private company assets, you should do that. But then beyond MicroStrategy, you could take the convertible bond, right, or the preferred of MicroStrategy, and those do generate income backed by Bitcoin. So you could do it yourself. Right? You could take a little bit of Bitcoin and sell it and pay yourself 8%, but that's a hassle. Why not let him do it for free? You don't pay a fee for it. So there are a lot of assets that you might want to own on top of your stack. Now, for those who want to say, no, I want it all outside fiat. I want it all protected by Bitcoin, and I can fund my lifestyle other ways. I'm actually not going to say that's not a bad idea. I mean, I'm now down here in North Carolina anyway, but and you happen to be on a bus in Boston, and you look down, and there was the Patriots playbook. Would you not take that and use it? Of course you would. So when you have a proven playbook, you should use it. But the reason Metaplanet has been so successful is there's really 2 things. One, in Japan, there was a structural arbitrage opportunity Because if you hold Bitcoin yourself, you pay 52% tax. If you hold Metaplanet, which holds only Bitcoin, and you sell it, you pay 20%. That's better, okay? And the Bitcoin ETFs are illegal at this point. They'll be legal at some point, but they weren't. So there was this, and most people in Japan, they were nervous about owning US companies, believe it or not. Most of it's called home market myopia. If you go around the world, people in America have more US stocks, people in the UK have more UK stocks, people in Brazil have more Brazilian stocks, people in Japan have more Japanese stocks. It's just the way we are. We think all the smart people are in our home country. It's not true, but that's what we think. You look at that, and then you look at, there's one in the UK, and now there's one in Brazil, and okay, as long as they're taking the MicroStrategy playbook or strategy playbook, stock went down, which doesn't really make sense, but it kind of does in the sense that he's not a pure treasury company, whereas Metaplanet and Blockchain Group are. So the strategy is the only thing you have is a lockbox of Bitcoin. Mm-hmm. And then you have the ability to issue new shares or debt to buy more Bitcoin.
Yeah.
And by doing that, there's a flywheel effect, and that's pretty good.
So you would, if we were to break down the opportunities here for investors, I'm going to summarize and you tell me if I'm accurate. You would stay away, I'm guessing, from like a GameStop, which is not a true treasury company, unless you believed in GameStop.
If I believe in the GameStop short squeeze play, okay, fine. If I believe that the CEO is going to take all the $5 billion and make it a really core part of his business, but the problem is, there's a subtlety here in that what made Metaplanet so good and Blockchain Group so good, and this one in Sweden that just did it, and the one in the UK, the futures price is higher than the spot price, so you can roll down that futures price and make a nice return. Well, then there are gamblers. And the gamblers are the ones that, this is meme coining, and no, there's value, like you're monetizing attention. Maybe. But at the end of the day, if you're gambling on something and the only way you make money is somebody else pays you more for it, and it's not scarce, like if you own the LA Dodgers, some person with a big ego is going to pay you more for that because there's only one LA Dodgers. Oh, they can make more teams. Yep, they don't do it very often. So that's fine. If you own a one-of-one piece of art, yeah, fine, okay. But if you own something that they can just print more, yeah, it can go up in price, but...
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.